Great. So we're in studio today, Judy and myself, talking about infrastructure and what a busy year it's been.
Good day, Keith. Yes, it has been a busy year. I think it's been a good year. As RMB, we've closed over 1,500 megawatts of renewable energy across government programs and also private power. As we reach the end of this year, we actually look at the mammoth activity that has happened in the market with great joy.
Fantastic. Tell us a little bit about where the success has come from.
So we've actually seen a lot of activity in renewable energy led by the private power space. What precipitated the activity levels in private power was the lifting of generation regulations that required that an IPP get a generation license to generate power 1 megawatts and above. So this was lifted about a couple of years ago. And then at the back of that, we saw a lot of activity from independent power producers looking to sell power to private offtakes. Of the 1,500 megawatts that we've closed to date, over 1,000 megawatts has been in the private power space.
So that's quite a big change in the theme from moving away from purely government programs into the more private-driven programs.
Yes, it's actually been a very interesting time. As you can imagine, I mean, from about 2011, we have had these multiple rounds of REAP programs being bid into the market, and they've been largely standardized. And now what you're starting to see are very bespoke, highly structured PPAs with various off-takers with very little precedent. So it's been a very interesting time as the market now has been formulating a view in terms of what is the standard to basically produce and provide power to private offtakes.
Fantastic.
So maybe, Keith, this is an area that you can talk to about. I mean, you have spearheaded the private power activities of RMB over the last 2 years. What are the major themes that you've seen actually coming out of the sector?
Yeah, so it's been a bit of fun. We've been creating the sector. We've had to really build it as we've been flying. Every off-taker, every energy-intensive user is a big corporate of their own accord, and they each have their own specific way that they want to procure power. There've been big players such as Sasol, Sibanye, Anglo American, all involved in running programs, and that's just to name a few. To support our IPP clients, we've had to innovate quite substantially around a lot of the product set that we've been able to offer. So one of the things that we realized when looking at the private sector is that we couldn't rely 100% on anybody's individual balance sheet. So we had to really upskill the bank in terms of understanding the market, the electricity market, the ability to trade that power to other users. And what that's allowed us to do is very much take a much more lenient view on how much balance sheet support we need. And what that means is termination payments, which you'd typically look for in project finance, which really underpin a deal, those have come down substantially. We've been able to take much more view on that market. So we're looking at funding a SAP deal, which is a fully market-led project, where it's not 80% geared project finance. It's got a lot more equity gearing in there, and there's some fun technology around that. So we really are looking at this from the full market spectrum, from a more project finance view for the big off-takers through to full-on market view to everything in between. And that's going to take us over the next 10 years into the changing landscape that we see coming.
Very, very interesting, Keith. I mean, and I think that the work that we've done on the trader space as well, I mean, has been pioneering, looking at the security that the trader provides to IPPs as well, and how a bank could provide those LCs.
Absolutely. So traders in and of themselves are intermediaries. So between big generators or a series of generators to a group of off-takers. And really what they bring to that is the aggregation on the one side and the other. So you get portfolios on both sides. And what their right to play effectively is their ability to bring liquidity into the market or into the value chain. So if one generator falls over, they've got a series of off-takers on the other side. If one off-taker falls over, they've got the ability to change generators.
Many to many.
Many to many type of option.
I think that also linked to what you're saying. I mean, it does also evidence the changing landscape in terms of the clients that we service as well. I mean, we've seen a lot of new entrants in the market. I may not say over the last 2 years, of which some of them we've actually banked. So what's interesting about the sector is that it does continue to grow. Our client set continues to evolve, and we expect it to continue to evolve, especially now with the grid expansion works that are expected as well. Yeah. So in terms of like investment, Keith, I mean, it seems like there's a lot that's coming. What do you think, I mean, is going to be required from the financial sector to deliver against, particularly, I mean, the electricity investments for the electricity crisis? Where do you see that going?
You know, we've seen huge funding or capital that's flown into the generation space. So we've been involved in projects of circa 50 billion rands with over the last 12 to 18 months on the generation side. But going forward, we see a lot of capital needed to flow into the transmission space, investing in the grid. We pioneering some thinking, you know, certainly leading in from the IPP side into the grid investment. And then, you know, the numbers spoken about Eskom itself, transmission development plan, anything from, you know, 150 up to 300 billion rand spoken about there. And that, yeah, that continues. There's storage that we need to talk about. There's balancing the grid with the gas to power type program. So it's huge amounts of capital needed for the space. But Judy, you know, we're talking about sort of rand billions. We don't talk millions anymore. We talk billions. But tell us a little bit more around the broader impact to society from all of this activity over the last 12 to 18 months.
I think that the activity is a lot. I mean, as you mentioned, it's over 50 billion of fresh investment that has gone into just the renewable energy sector. I mean, to translate that in terms of what it means to the man of the street, it means that it's enough power to power up 500,000 homes as well. So it's not insignificant. I mean, even on an environmental perspective, it basically results into a reduction of 500 million tons of CO2 equivalent in terms of emissions as well, which translates to about 1.3% of the country's emissions. So it's very significant in terms of, you know, the work that we've done in a single year. So imagine what we could do over the next decade as well. And then from a job creation, because we know that we're in a country where we need to stimulate the economy, which renewable energy investment does, because of the fact that it does have the multiplier effect in terms of economy stimulation, right? But it also creates jobs. And we estimate that it has created about 20,000 jobs based on just the 1,500 megawatts that we've concluded to date.